Traders, welcome back to another video. And in this video, we're going to talk about how to identify high probability setups following price action rules. Now, as a price action trader, I'm only going to be working with raw price action as the candlesticks are printing on a chart. And I'm going to be using price action technical tools that I have in my disposal. Now, I know that there's always a pattern on a chart forming, that these candles are never just randomly trending higher or to the upside without any pattern. There's always some form of pattern that the price action is showing us. So what I can see a series of lower highs, lower lows. I see this 21 bar exponential moving average, this blue line is pointing down, which is confirming the bearish momentum. And I can see that the EMA has been rejecting prices every single time. So bias is bearish, and my goal is at the start of the day, identify what is the bias, because I want to have a leg up on the structure so I can have understanding where the market is going. Now I'm following the trendline rule. This is why I'm drawing these channels. And trendline rule says after there's a break of a channel, traders will retest new extreme. And this is exactly what happened. We have downtrend working lower, which I use first few swings. It got confirmed later on here. It also fits nicely off the lows. So this is really showing me nicely a downtrend. We had a break of the downtrend, close outside, and now we created new low. So according to trendline rule, I expect correction or possible reversal. Now there's a possibility for me to draw a channel a little bit wider, let's say something like this. But when it comes to price action, you don't want to be redrawing channels too quickly. You don't want to be making them wide too quickly. For that reason, I didn't opt for this option. I decided to keep it with the break and new low. And if we get later on confirmation with the wider channel, then I would adapt. But I don't want to draw channel wider too quickly because it can lead to misjudgment, and I want to follow the pure price action. So we have a break new low, and prices are strongly pushing to the upside. So we have a strong push above EMA, and we have what looks like a strong bullish momentum. So at this point on, I kind of have to disregard bearish momentum, and I have to adapt to this bullish momentum. So I'm going to be looking for channels to the upside, and this is what I did. I found today this channel, which had a break and multiple small legs to a new extreme. So according to price action, this short-term uptrend played out. But notice what is happening. Prices are not pushing below EMA. Instead, EMA keeps holding prices. Okay? And since this uptrend is the structure, the high probability setup to go long is going to be second entry long or failed second entry short. And this is the highest high, and we have first entry long because we triggered above this bar right here. It failed, and we have a second entry long triggering above this bar right here. Even though we have a bullish bar here, we didn't get the trigger above one tick above this bar right here. They're matching highs, so only bar where we got a trigger above was this bar right here. So this is a second entry long. Now, the reason why I didn't like going long here on this second entry long is because the short-term uptrend already had a break and new high. Is this a wrong trade to take? Well, not really, because EMA keeps holding. You also have small little support indicating that the buyers are still strong in the market. And if you took this trade right here, I can see why. I can possibly mark it as an aggressive entry, but with the fact that you have a break and new high and it's getting a little bit stacked, I was being patient at this point on, because with the break and new high, I would need more confirmation. I would need a higher low confirming the second entry long for me to go long. Unfortunately, there was no trigger below this bearish bar for us to get higher low. Prices just strongly reversed to the upside. So the structure keeps pushing higher. So it is obvious at this point on that this channel is not the proper pattern, because there's still strong bullish momentum and I need to adapt to the structure. There's probably a wider pattern. So this was the pattern I found later on because it got nicely confirmed here. Okay, so right here, this setup right here, and this is the confirmation for the channel. So I'm just going to copy it, put it at the top like this, and I have a nicely fitting uptrend. So right now, all I want to see a two-leg up pullback, second entry long at the key entry point. So I always reset the count at the high. So I have new high, only a first entry long, count reset, only a first entry long far away from key entry points, and market is pushing higher. And notice what is happening. Prices are not making their way down to the key entry points. Instead, I'm observing that we have overshoot for this uptrend. An overshoot a lot of times lead to a break of a channel or straight up reversal. We've talked about this in our previous videos. So once we have overshoot, I can expect for this channel to get broken, or for the channel possibly end and the new channel started. We will get reversal. Now, also what you can take into consideration, notice the overnight high that is right now coming into play. So I'm combining overshoot with the fact that we're bouncing off the overnight high. This is important key level. A lot of times they're coming to play, and this is my job. I have to analyze it before I start trading. So I combine overshoot with the overnight high, and I can see massive bearish leg working lower. And notice we have new high, first entry long, we triggered above this bearish bar, failed, second entry long. So we have second entry long, and at first glance this looks like a decent setup, but is this a good setup? No, it is not, because I combine overshoot, which tells me that I need to wait. And once I see overshoot of the channel, the only way I enter with high low or lower high after second entry short. So when I was watching the second entry long, I was not planning to take it. I was looking for high low confirmation, because overshoot can break the channel, so you can get trapped. But once you get high low after second entry long, that's a lot of times how you can avoid getting trapped and how you can recognize that the buyers are still active. So you combine overshoot, you combine the key level resistance, and also if you're now watching the overshoot, you have your channel a bit wider. You just play the resistance because you just bounce off of it, and you can see quite a strong bearish leg down. So this fee is a little bit too bearish to be buying just yet. And also notice big bullish bar and another big bullish bar. When you see massive bullish bar at the end of the move, that generally represents exhaustion, depletion. And if you're so far away from EMA like we did right here, I really trusted the overshoot, and for that reason I skipped it, and I recommend skipping it as well. Now you have a break new low, and as prices are pushing above EMA, we expect to get felt second entry short or high low, but we never get high low. Prices are pushing higher, but there is no trigger lower. There is potentially a higher low here. We didn't get the trigger above this bullish bar, but you're not above EMA anyway. Okay, so if there is a trigger here, hypothetically above this bullish bar, you cannot go long anyway, because EMA at that point on is flat. It's exactly middle of these bars, and this is congestion. You're supposed to push above EMA clean without any congestion. But I was still expecting for prices to create new high, because the straight up reversal is not that common. Most of the time after break of a channel, you're going to get new high. So I was still expecting to get a new high, because notice, basically from the beginning, we've been working strongly above the exponential moving average. So this uptrend is quite strong. So according to trendline rule, I expect new high. Now that doesn't mean that if I don't get the long, I can go short. Notice we have new low formed, first entry short, tick higher, and a second entry short below this bar right here. I cannot go short. You can see what would have happened. You would have gotten filled, and you would have gotten stopped out, because prices broke one tick above this signal bar where you would have entered, and you would place your stop loss above one tick above the signal bar. Bias is bullish, and I expect for prices to create new high. I cannot go short, but I cannot go long just yet. We are below EMA, and it's too stacked. So prices kept pushing lower, and at this point on, I didn't have this wider channel. All right, I was just playing mainly like this: first leg, pullback, second leg. So I was still looking for prices to create new high as we are trending lower. This is where the second measured leg basically bottomed, and to this point I was still expecting push above EMA, and I was expecting a felt second entry long if we push above EMA, but that never happened. After this bullish bar, there was last bearish leg down, which when I was watching this live, I decided, okay, my analysis may be a little bit off, and I need to adapt to the structure, and this structure is looking a little bit more bearish. So this was the point where I adapted, and I found this channel right here. So I'm just gonna copy it, put it at the bottom. EMA is pointing down. So at this point on, we had a new low, first entry short pullback, second entry short. I was almost about to enter here, but we don't have a trigger. Notice we have a big bearish bar, but there is no trigger below this bearish bar right here. So the second entry short never triggered. I was about to go short of two key entry points. There was no trigger, and market kept pushing higher. So at this point on, it got a little bit confusing, because this downtrend is looking quite strong, but at the same time you may get new high of this uptrend. So at this point on, you know, you should just be patient. You have high low here above exponential moving average, which is once again a little bit tempting to go long here, but I feel it's not too clear what is the proper direction here, because this downtrend was quite strong. I would need a little bit more confirmation, but once again, if you took this higher low, and quite tempting, shorts got trapped above EMA, this signal bar, so decent entry to go long. Now market is pushing higher. We have a break, and we created a double top. Okay, and double top sometimes is going to be considered enough, because prices are pushing below EMA. Okay, and as prices are pushing below EMA, and we had this double top, which is all the bullish momentum we had, from this point on, I start to anticipate new low for this downtrend to be formed, because we are pushing below EMA and we are confirming the overall momentum. So if I expect for prices to push and create new extreme, what is the high probability setup that I anticipate? Either second entry short or filled second entry long. And since this is the double top, this is where we set the count. So this is the highest high. We have a first entry long, pullback, second entry long. And this was my first trade for the day, second entry long of 2 key entry points. It is below EMA. EMA is rejecting prices. It is off of this trend line, confirming the trend line. Nice visual two-legged pullback, felt second entry long, great bearish bar. And this was my first trade for the day and my only trade for the day. Now, there was a small break right here and new low was formed. Okay, and now you even form a new low for this downtrend. So I see from the price action perspective, we have massive move up. We don't have a new high, but 2 downtrends right now played out. Okay, this channel has a new low and this short-term channel has a new low as well. And I can see that EMA is starting to get flat. It is starting to get up and down, up and down. So once I see this, I expect to get filled second entry short. I was expecting to get filled second entry short here, but it never formed. Instead, there was one more last bearish leg down, but eventually prices pushed above EMA. But this is what I was looking at. One trader was looking at potential channel. I think this was the flatter channel. The trader found something like this, but this is too flat. This is not really confirming the structure nicely. And remember, once you're in the trading range, you don't want to keep drawing the channels too wide. So I'm playing with the short-term channels for the most part. And then we had the last bearish leg down. And as prices are pushing above EMA, this is confirming my analysis. Now I definitely have a new low for all downtrends. This support is starting to show some evidence. And we are pushing above EMA, confirming the bullish momentum. And as you're pushing above EMA with all downtrends having new low, this is where you zoom out and you remind yourself, all right, this was pretty strong, big move up. So it's possible that it just took a little bit longer due to the overshoot for the bearish momentum to play out. And we may finally get the new high for the first uptrend. So this is what I'm looking at. So there is a bullish feel in this trading range because we are still at the upper half of this trading range. So once prices are pushing above EMA, I expect to get filled second entry short because that is a safe reversal pattern for me to take. That is a high probability setup. Okay, I'm not interested in gambling, taking a bunch of first entries on a chart. I just want to take the nice high probability setup that is going to come to my key entry points, and we have new low formed, first entry short because we trigger below this bar right here, pull back higher, second entry short failure, and also this is new high, first entry long, pull back, second entry long. So these are 2 high probability setups in one. Of the EMA, strong bullish spike. I didn't take this trade and I kicked myself afterwards. The reason why I hesitated when I was watching this live, and it formed quite quick, even though the entire day was slow, I didn't like taking this at the time because the body was still quite far away from the exponential moving average. And here's where experience and overall context comes into play. Because if I take a look at the structure, what can I see? From price action perspective, all downtrends have new low, so this is good. We are coming strongly off of this support, 3 touches of this support, and a strong push above EMA, and I expect new high. So the context here is very, very strong for me to take this filled second entry short and a second entry long. So the proper play here was to take it. I didn't take it and it was trading error on my part. I was too careful here. And we had a similar setup like that in the future as well. Because from this point on, you guys can see there's a strong bullish spike up. So this is indicating strong bullish momentum. Now, you've reached new high for this major uptrend. So I expect potential correction. But notice what is happening. This is a very strong uptrend. We have new high and we have first entry long, pullback, second entry long. I don't want to go long here because short and downtrend is in play. So I need to draw these trend lines even for these shortened corrections. I have second entry long and I also reached the new high for this uptrend. So we can correct longer only if we stay above EMA because we are not pushing below EMA. EMA keeps holding prices. If we get high low, that is going to confirm second entry long. That is a safe place for me to start looking to go long because EMA keeps holding prices and the high low is a confirmation setup. And here we have new high, first entry long, second entry long, and we have high low confirming the second entry long. But notice once again what is happening. The high low didn't really touch truly exponential moving average. But now that I'm looking back and I had the gut feeling that it will work, I really almost ended it. And this is where you really have to weigh in the pros and cons. When you look at the structure, when you look at how EMA is holding prices, how nice bullish bar this is, high low after second entry long, you know, this is a good entry. I'm going to mark it because even though it's not touching perfectly EMA, this is a good entry to take. This is sometimes how you use lower highs and high lows. When you're unsure about the initial second entry or the initial setup, you just wait for confirmation just to be sure that the market is confirming your direction. And this was the perfect example. Second entry long, EMA kept holding. This uptrend needs to get new high. So the high low confirm your overall first initial analysis. So giving you enough confirmation that you can go long here. Now, as prices kept pushing higher, EMA kept holding again. This is where I identified this channel. So this uptrend is in play. EMA and spike candle channel are running together congruently. This gives a confidence in the setup. Now, I expect to get a two-legged pullback second entry long at the key entry point. However, there's no good two-legged pullback at the key entry point, only a first entry long here. The spike candle channel is broken. Now, just because the spike candle channel has a break, that doesn't mean the bias is changing. Notice the exponential moving average has been holding the entire time from this very bounce off of the support. So there's clearly a strong bullish bias in this market. I'm going to draw the short-term corrections again because it is only safe for me to go long after this downtrend played out. Now we have a new low, and had we formed a failed second entry short, it would have been okay to go long because we would have two attempts by sellers to create new low, but it would have failed. In this instance, the second entry short worked and created new low, but I was still expecting to get a failed second entry short. Why? Because this spike candle channel right now needs to get new extreme. All right, so I'm just following the bias. The EMA is helping me to navigate the structure. So many high highs, high lows. EMA keeps pointing up, so clearly a bullish structure. So downtrend played out with the break and new low. And notice this is the first leg down, pullback. Oops, I managed to drag something different. Pullback, second leg down. So we have two-legged pullback down, indicating to me that sellers are over. And I'm still looking for failed second entry short above EMA because I expect new high according to trendline rule. Okay, the downtrend correction played out. So from price action perspective, the sellers are no longer in control. We have a new low, first entry short, pullback, second entry short, and a failure never came. There was no trigger above this reversal bar right here. Instead, there was a last leg. After this failed second entry short didn't form, this is where I took my break. We can see that the failed second entry short formed afterwards. But notice what is happening. Last leg down, but we can see double bottom forming. And since the downtrend had to break new low, this was just additional second leg to a new extreme, but the bias still remains the same. I still need to get new high. So as prices are pushing above EMA, this is confirming the bullish momentum like it did here. And we have first entry short, little pullback, second entry short failure. Now the second entry is a little bit hidden, but you can see that it looks like a failed second entry short. Big bullish bar above exponential moving average. Coming off the double bottom, you still expect to get a new high. Decent entries take a chance on double bar entry. I would probably wait for trigger above and drop my limit order further back down. Now it is a little bit stacked, but you can see that sometimes that happens with these failed second entries because there just needs to be time for the sellers to get trapped on the second entry short. So since you have so much context on your side, downtrend played out, you're coming off the double bottom, strong push above EMA. This failed second entry short definitely makes sense and you still expect new high. The new high has been reached. Now this short-term uptrend, I'm drawing it wider because it is a with trend uptrend. Against the main trends, these corrections, I'm drawing them tight. But once I'm looking for trend line that is with the direction of the main trend, I can draw a little bit wider. It eventually had to break new high, but you can see market is about to close and you never will be trading this late. So after new high was formed, market is correcting. So the perfect price action rule. This was the bigger picture for the day. Don't forget to pay attention to these overnight highs and lows because you cannot just zoom in and focus on this uptrend. Once it approaches this important key level, it may come into play and combine with overshoot. It generated strong momentum in the opposite direction. But of course, you're following the trend line rule, so you still expect new high, and then you just stick into the short-term channels and the bullish bias eventually resume. So not that many easy setups. It's a shame that these two setups didn't really form close enough to exponential moving average, but there is a strong context on your side when you're taking this setup. So you can definitely pull the trigger here. And there are a couple more aggressive setups. Just because I didn't mark them, that doesn't mean they're not following the rules. They may be just a little bit more for advanced traders, so I'm not marking them, but you may take them just like the second entry long. So I hope you find the video helpful, educational. I'm going to see you guys next one. Take care, everybody.